Good afternoon, ladies and gentlemen, and welcome to this week's trade review. So it's been a difficult week. It's been very topsy-turvy. As you can see by the screen that we've got up there at the moment with this week's trades, there's probably, or there is almost definitely more red than we normally see. Certainly more red than I like to see. So if we just scroll down to the summary, and you should all get a copy of this, you can see there's been 65 winning trades, 13 losing trades. So a higher number of losing trades than normal, most definitely. Tuesday was the day that caused most of that, when I lost 317 pips or points. But when you look at the summary, 9 trades in gold and 571 pips against. The Dow has been nicely profitable, 1,322 pips. The DAX, 15 trades for a very minor gain. So the profit or the potential for profit has certainly been more markedly in the Dow than any other product during the course of this week. But gold did catch me on a number of occasions, once on Monday, a number of occasions on Tuesday, and then almost today as well. So I do say to a few people, it is a bit like getting on a bike. You do need to get back on. But I was reluctant during the course of this week, and the real reason was I expected resistance in gold at 1780, certainly at 1785, and then I would have almost guaranteed it at 1800, and none of those levels really offered any resistance during the course of the week. And gold traded up to about 1817 before it started to reverse and come back down towards the 1800 level. We still trade proud of the 1800 level. I believe at the moment the gold is trading around 1805. We'll have a look in a few seconds. But it's been a good week. Today was nicely profitable, 530 pips on the day. Could have been a lot different though, to be honest. I had decided that I wanted to be long the market and started to get long from early morning. In very early morning trade, the market dipped down to about 25,300. I placed a stop at 25,280, so I was very much at the limit of the movement that I wanted to see, and was very close to stopping out my first trade. And then after the European opening bell, we did see a bit of buying coming in and the market started to rally, so much so that we're up around 25,650 as I'm talking, and again we can look at that in a few minutes. So predominantly predominantly Dow trades today, and some nice returns on those trades throughout the course of the day, so that by the end of the week we're looking at a nice gain. It looked very difficult, very different on Tuesday and Wednesday, but we're looking at a nice gain of 783 pips by the end of the week. But it wasn't without headaches, and I don't want to suggest that it was. It was a very difficult week to trade. Lots of winning trades, but not really catching a big movement on any of those. We caught a couple today. But when gold was going against me, and also the Dow yesterday after the jobless claims numbers, took some fairly big hits on those. If you were to take out the 4 biggest losing trades or the 5 biggest losing trades on the course of the week, they'd be close to 800 pips on those trades. So that would have put us up at about 1,500, 1,600 pips on the week. So please send your questions through. I'm just waiting for those to start coming through on the phone. There is one from last week that I want to have a quick talk about as well. But you can see on the markets there, we're trading back up towards 25,700. We've had a nice bit of volatility in the Dow since the open. It's traded up towards this level, 25,700 once, gone all the way back down to 25,000. Almost 25,500, and has rallied again from those levels. So if you're picking the range right, There's lots of profit within those levels, but trading back towards the high, and possibly going to move back towards the levels that we saw before the drop off after the open of the markets yesterday, and the jobless claims number. I think the market traded up to about 25,950, probably, or possibly a little bit higher than that. Just going to open up gold for a quick look at it. This is the daily chart. One of the things I'm looking for constantly with gold at the moment is for any areas of strong resistance, and I've been struggling to find too many since we've come above this 1800 level, although I do think 1817 to 1820 is going to be a tough area for gold to break through, but there has been consistent buying over a long period. As you can see, going back to January of this year, we've had a fairly big movement up from about 1680 to where we currently are, and as much as I like to believe that gold has still got a decent movement to the downside, there's a lot of people, including Goldman Sachs, who are opposing that view at the moment. And you can see that we're trading at levels that we haven't seen for a number of years at this stage. The question that I just wanted to get round to a little bit from last week, and please send some in as I'm talking now, but there was a question last week about from Nature's Cure Island. I'm sure that person has a name, but they see the Dow potentially hitting 24,000 in the next month or so. I probably don't, to be honest. I think the movement that we've seen down to these levels is probably the extent of any correction that we're going to see. There's been some decent buying coming in from that 25,300 line, 25,700 before it. I think that at the moment what we're seeing is a big battle between coronavirus and the expected economic recovery. So the market is very much looking at that economic data and trying to take as many positives as it can on a daily basis, yet keeps getting pulled back by the news that we're seeing surges or spikes in the number of coronavirus cases in a number of US states, and that is starting to worry. And rightly so. I mean, everybody's been expecting this spike, this surge. The medical officials are telling us this on a regular basis, yet the market has been ignoring it for a number of weeks now, and we've traded up reasonably aggressively on the back of that. One of the things to add into the equation, and certainly for the start of next week as well, is it's very much earnings season is upon us. And some of those big stocks, the banks, will start reporting next week, and the market will enjoy some volatility on the back of that. So Fonz is asking, what about the opening bell strategy? Why did I not trade any more around the opening bell? The answer to your question, Fonz, is there was a couple of days, I think, at the beginning of this week where it wasn't so clear cut. I think if you look at the first 10 minutes, and the one thing that you can guarantee about the first 10 minutes after the opening bell in New York is that you're going to see some decent movements. I think for that 2 or 3 week period it was fairly consistent that there was a drop off, and then not quite so consistent, but then there was a rally from that particular point. So it's that 10 minutes that I'm looking at, and I don't think it's been so marked this week. Just because you spot something for a while doesn't mean that it's going to continue ad infinitum. It's a trend that's there for a period of time. Take advantage of it. I certainly took advantage of it during that period, but there will be a time where it comes to an end, or it changes somewhat. And I haven't been. I've had a couple of meetings during the course of this week, and I haven't been as focused on that period as I would like to have been. But if we just open up the Dow now and have a quick look at it, we're looking at the best part of a 200 point range from 25,500 all the way up to 25,700. So the opening bell, let me just bring some crosshairs into this so you can see it a little bit closer. So the opening bell was about here, and we've rallied up. So the movement was the opposite in that first 10 minutes, but we've also dropped off completely back to the same level. So a good amount of volatility. And when it comes to, and I know a lot of you are working and you have other commitments during the course of the day, when you're trying to plan your day and you plan the trading, a lot of my trading, as you will have seen over the last number of weeks, is that we is I trade a lot early in the morning. Sorry, I'm trying to read messages at the same time as talk, and it's not connecting correctly. So I trade very early in the morning because there's been some really expansive moves in the Dow and the DAX prior to 8 a.m. Now I think the moves are more tradable probably from 7 o'clock to 8 o'clock. There's very limited liquidity before 7 a.m, which I certainly found out during the course of this morning as well. Then mid-morning, either a decent movement from about 10 o'clock onwards, be that to the upside or the downside. It's predominantly it's been to the upside recently, but that doesn't mean that that's a guarantee. And then again prior to the opening bell in New York. So those are the three periods that I like to trade, and certainly in terms of trying to manage your days and manage what you're doing, that's where you're going to see the more activity from me. So I have a number of orders a number of messages coming through here. I'm just got to open my phone again because it closed itself down. So James is asking, how do you determine where to put your stop losses? We had a losing trade on Dow Thursday. It dropped about 200 points and I think you stopped out. Standard, James, or the answer to your question is that I have some fairly standard stop levels. They're not rigid by any stretch of the imagination. If I see something in the market where I still think we're going to see a turnaround from that point, I will extend those levels out. But for the Dow, I'm normally looking at something for around 150 to 200 points of a stop limit. In the DAX, it's probably half of those levels, so 75 to 100 points. If I was trading currencies at the moment, it would be 60 points, and then gold usually around 100 points as well. So those are pretty much the standard levels that I have. I think you all have to adapt your own levels based on your account size and the amount of trades that you have open. So I have an overall risk level that I would apportion as well. Certainly, if I'm stepping away and going into meetings, those are the stop levels that I would normally use. Mark is saying, I make my trade decisions based on sentiment rather than quantitative analysis. How does your sentiment contrast between gold and the Dow? What's the correlation? Well, there is some correlation. The correlation changes fairly regularly. One of the trades that I like to do, Mark, and I haven't been doing it so much recently, is if you've had a rally in both of them, is to sell them both. You might see them, there is a certain amount of trade-off between them, but what you also see is that one of the movements will be more marked or far more significant. And so if you see a small rally in one and you have a big drop-off in the other, which usually happens in the Dow as opposed to gold, but that's not completely 100% of the time. I try to take advantage of the bigger part of the movement and give myself a bit of a hedge. I haven't been doing too many of those trades recently. When I do them, they'll be described as a paired trade. But there are correlations. There's a dollar correlation, and obviously there are inflation and other type associations with it. One of the things that I think we saw at the beginning of this week was with both the coronavirus fear and a stock market that was falling somewhat. There was a risk-off trade, and what you sometimes see is you see a rotation out of the equity market and into gold, and you'll see. So it's not just a fear trade. If something is happening in the markets at that point, you can see a rotation where people get out of equities and prefer to put their money into a more risk-averse market such as gold. So Vivek is asking, what time frame do I trade? Is your strategy based on price action? It's more based around sentiment, the prevailing sentiment as I decide for the day. So one of the first things that I do every morning is look at where the Asian markets have been, in particular how the last half an hour of trading has gone in that market. Does it give you any insight into where the open is going to be in Europe? Are there any things that are happening around that particular close of that market, or any important events that are going to follow through into the trading day? Obviously, the trading day for me is quite separate. You have the Asian markets closing, European markets opening, and then you have the US markets opening, and I can think you can separate it into those three particular phases. But I try to amass as much information as I can about what's going on in the markets, to determine what my bias is. So you can look at sentiment and you can think about how the markets are being perceived at that particular time. But one of the important things, or the most important thing for me, is what is my bias? Is this market going up or is this market going down? If I believe the market is going up, I'm going to trade from the long side. If I believe the market's going to go down, I'm trading from the short side. And so you'll see that when you look at my daily trading on any particular day, it is predominantly one way or the other. So it's either buy or it's sell on that particular day, and that may be buying on dips, or it may be buying with looking for the market to go higher. So there's a couple of other questions here. I'll just rattle these off quickly. So Paul is asking, is there any particular news sources that I would use or recommend? I think CNBC, I've mentioned it before, I think is as good as any. I'd always have it on in the background. I think if there's any breaking news, you get it as quick there as you get it anywhere else, and obviously it's free, or it's included in your Sky subscription, whereas if you look to buy Bloomberg or Reuters, it's going to be considerably more expensive. Another question there from James, do I see the FTSE dropping back to 5,500? FTSE is the most underperforming of the indices at this particular point. Some of that's currency related, some of that's Brexit related. The furlough scheme is obviously an issue as well in the UK. I'm of the belief that we are going to see a recovery. There might be a few corrections on the way, but I think with the opening up of the economies as they are, I do believe that coronavirus will come under control. There's a story there again today about the remdesivir vaccine and how the tests are going there, and the positive basis to those, and that's what's seeing a lot of the rally that we're seeing at the moment. But I think from my perspective, when I'm looking to trade, I like to start each day with a blank sheet of paper. So that's why I don't like to carry positions in and try to protect those. I really want to have an opinion every single morning in terms of which way I'm going to approach this market, whether I'm coming in from the buy side, the sell side, and I really am just interested in the next 8 hours as a maximum. What markets are going to do long term are not really what interests me, because this is a day trading scenario where I want to get into trades today 15 to 20 of them, as you see me doing on a fairly regular basis. I want to trade, I want to be in the market, I want to be risk on, and I want to be involved all of the time. Hit that number of trades, and hopefully profit. Longer term, I think the markets are going to go back to, as you see with the Nasdaq trading at record highs almost on a daily basis. I think the markets will go back to test the record high levels at some point over the next 18 months, but it's not something that's really going to occupy me till then. So look, I've run a little bit out of time or over time. I'll join you again next week for another look back on the trading week. Thank you very much.